Zach's Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This week we're going to screen for stocks with first profits and find out exactly what that means. Kevin Matras, our top stock screener, is here with us, and he's going to fill us in on all of the details. So, we've talked about this in the past, I believe. You're talking about companies that have finally posted their first profit.
Finally.
And you do this from time to time. Why is this week a good time to talk about this?
Well, you know, with first quarter earnings season winding down, you know, I've been running this screen. And, you know, the whole idea is to find companies that have finally shown their first profit within the last year. So, again, to crystallize it, I'm looking for companies that have not shown a profit in the previous 4 quarters, but have finally shown a profit in this most recent quarter. And I pretty much do this every post-earnings season. So here we are again.
And it's important because earnings seasons generally make it more apparent who these companies are?
Yeah, I mean, you know, if you're looking for the most recent period, you really want it to be the most recent period within a couple of weeks or whatever, as opposed to, you know, several quarters old. But the kinds of companies that will come through, let me just back up here, is a lot of these companies are going to be brand new, right? Okay. And the first profit that they are reporting may be the very first profit in the company's history.
Right.
For other companies, they may have had a long history of profitability, but for whatever reason, you know, they have fallen into a position where they haven't been profitable, but they have finally returned into a profitable position. And the reason why I like this concept is because, first off, it is a Herculean effort to be able to get into a profitable position, whether this be, you know, your very first time ever or whether this be returning to profitability. But for me, you know, first off, you're looking for improvement. So when you're finally seeing the company, you know, get profitable, that's improvement. But for me and for a lot of people, people dislike buying companies, even if they are improving, if they cannot show a profit, if they're not making money. So there's a lot of people who won't even consider a stock if they cannot see that plus sign at the EPS reporting period. So this is what makes it so important, because you need to attract investor interest.
We can understand that line of logic, though, right? If a company's not showing a profit, people are going to be a little hesitant.
Yeah, you know, going back to this improvement thing, if first off, if a company lost less than the previous quarter, that by definition is improvement, right? And if a company continues to grow less unprofitable, once again, that is growth. But there is something completely different between growth and being actually profitable. Because as I said, you know, even if you are getting less unprofitable, there are many customers who won't even consider a stock if they cannot show a profit. So once you finally have this profitability, you've got a whole slew of new investors that will finally see that register on their screens. Because again, most people are screening for stocks that have at least some growth, even if it's just a modicum of growth. This puts a whole new, you know, set of eyes on that stock, and usually once they get profitable, you can see that stock make some really good improvements, price-wise as well as continuation of this growth rate.
Okay, show us how to find these companies in the black for the first time.
Yeah, sure. The screen is very simple, okay? We just have 3 items in this screen. The first one is this. We want the EPS for the previous 4 quarters to be less than or equals to 0. This means in each of the previous 4 quarters, except the most recently reported quarter, the company has reported earnings of less than or equal to 0. In other words, no profit, right? The next item is I want the EPS for the recently reported quarter to be greater than 0. So this time, the company reported earnings greater than 0, meaning they finally showed a profit, right? And the other item that I put on this screen is I just simply want the price to be greater than or equals to 5. I just prefer to look at companies that are over $5. For one, a lot of institutions won't consider a stock if it's under 5, so usually that's one of my minimum thresholds. If you want to put a larger list of stocks on your screen, because again, a lot of these companies will be brand new and you may see a lower stock price, if you take that $5 item out, you're probably going to see the list double in size, but that's cool if that's what you're looking for. So that's something that each individual can determine for themselves.
So when you take a look at the list of stocks that came through the screen, you would expect normally to see a lot of unknown names.
Yeah, you're going to see a lot of companies that you may not be that familiar with. You're going to see some that that you've probably heard in the past that you haven't even considered recently. But when I ran the screen this week, I think there was maybe about, I think there was like 26 or 27 companies, and there was a very diverse set of names, and here's 5 of them. You've got APOG Enterprises, Forrester Group, Platinum Underwriters, Freight Car America, and the Ryland Group. So all of these companies look good fundamentally, as evidenced by their recent, positive earnings report. And I do believe that, as you see this trend of improvement continue, you can make this assumption that you're probably going to see this trend continue. These are great companies to put on your watch list, and I think these are also great companies, once you do your additional qualitative analysis, to consider actually getting into.
And to clarify, you may see companies whose names you recognize that for some reason a couple of years back fell out of profitability.
Right.
And have returned.
Correct, and that's what's kind of cool too, because you may see names that you are somewhat familiar with, and oftentimes, if for whatever reason they have fallen out of favor, oftentimes you'll see these companies trading at a good discount too. So now you have this great new profitability thing. You have a bunch of new eyes looking at this this stock, and if they're trading at these discounted valuations, all the better.
And did you own any of those that were on that list? It's not there anymore.
I don't see it now. I don't think I did. I don't think so.
Okay. If you want to know about a text version of this week's Screen of the Week, it's on our homepage. It's on our website, zax.com, linked to from our homepage, where you see the headline next to Kevin's picture. That's where you'll find the printed version of this week's Screen of the Week, and every week's for that matter. And if you want to know more about the Research Wizard, that's the tool Kevin uses to achieve all of these screens. Zax.com/researchwizard is what you should type into your browser. With Kevin Matras on the Screen of the Week, I'm Terry Ruffalo.